And we're live.
Totally. Ooh, stay in.
You stayed in, though that I have somebody over here in his feelings today. So
Why?
I don't know. He gets like that whenever we have like guests over or something like that. So all right. So Jolene, how are you today?
I'm good. Can you put the chat on slow-mo?
You know I have to go fix it.
Yeah. Okay, while you're doing that, I'm gonna share, but or share on social media. I'm, what's the word I'm looking for?
What you sipping on today?
Oh, thank you for asking. I am sipping on some artisanal ginger ale that I made. Small batch, delicious.
Well, that's good to know.
Yes. Mm-hmm.
All right. So let's see here.
Wait, how are you?
I'm good. I took a power nap out of all things, so that way
Self-care?
I can do a little bit of self-care, re-energize, and then now you'll see.
Okay.
But no, it was quite the day. Tons of stuff going on, tons of developments that are happening for the Come Up series. So, and on top of that, I'm still in the process of phasing myself out of venture capital. So that should be official around, I'd like to say June, mid-June, late June, around that time that I will no longer be making venture capital investments.
So is that like June, around Juneteenth?
Yes.
And we can celebrate?
That's technically
the goal. Okay. Gotcha.
But yeah, so essentially I will be able to step down and to be able to just focus a little bit more on the come up and some studio stuff that we've got going on. So yeah.
Did I tell you I have a new show idea?
I think I've heard of this, but I mean, if you feel like sharing.
No, I don't.
Because you're keeping a lot of folks out here in suspense, and it's heavy out
here. I know
here.
It's still in development, but I'm put it this way: I will be looking for new talent.
Okay. All right. And I got a surprise for everybody.
What?
So everybody's been like talking about, okay, these bottles though, where are they? Where are they at though? Don't worry. We had to do, when we release something from the Come Up series, we want to make sure that it's well thought out, well crafted and everything else. So something has it after like multiple redesigns and like, this ain't it.
Right.
We're finally coming with a design. So be on the lookout probably around, I'd like to say early mid-March. You should be seeing something hit the streets soon.
What is early mid-March? Are you saying early March or mid-March?
I mean, when I say early mid-March, I mean that's kind of like, it could be from the second week to the end of the third week.
Okay. I was just trying to get some clarification, some clarity.
Oh, and they said that they still waiting on the journals, from what I hear.
Yeah, and just like we said, quality control. No, me and Kiki, we're working on it. I promise you guys, we're working on it. But this is the first collaboration, and y'all create two creatives, working together for the very first time, and it's gonna take some time. It's all about that creative process, but trust. When it comes out, it'll be fire. So in the meantime, use your little spiral notebooks that y'all got from the dollar store or wherever and hold it down until we can get that to y'all. There's a whole process. There's a publisher involved. There's graphic layouts. I mean, it's a whole shebang.
That's a whole lot going on.
It's not going to just put something out all willy-nilly. You know what I'm saying? Like, we're professionals out here.
All right, let's get into it. What's up, everybody? I'm Mark Monroe, accompanied by my co-host, co-producer, good friend, also art extraordinaire, and galactic catalyst.
Hey, what's up, y'all? Jolene GC in the place to be.
All right. And this is Hot Take Thursday, a show where we get to listen to what is it that you are asking, and it is our goal to answer them. And my goal is to not get stumped, but to give you ultimate value from my perspective, and you never know, from Jolene's perspective as well, and to help you in your journey towards building your generational wealth. Let's get some things out of the way. Have you subscribed yet? Like, really, have you subscribed yet? And if you've subscribed, then kudos to you. And if you could send a message to somebody in the chat, be like, hey, you should subscribe. Have you subscribed? Don't do that. Anyways, if you haven't subscribed, go ahead and hit that subscribe button down below. And then on top of that, if you like this video, or if you feel like you're going to like it, go ahead and hit the like. But if you feel like you're going to dislike it and you just want to put that as a placeholder, that's okay if you hit the dislike. But then, tell us if we got better or if we didn't get better. We'd like to have some feedback there because we like to get better. And then on top of that, if you want to know when we come out with a new episode or a new video or when something is going to drop, go ahead and hit that bell so you can be a part of the Cool Kid Squad, aka the Notification Squad. So without further ado, we got a lot to discuss because I know that you guys be coming in hella hot and hella traffic with these questions, like Jolene likes to say. Mm-hmm. So I'm going to turn it over to Jolene.
Yo, I appreciate a good Hot Take Thursday. However, today
it's the beginning.
Today was off the chain. Okay, so the Dow tanked. It tanked, y'all. It tanked. It was minus 559.85 points. S&P 500 was down negative 96.09 points. The NASDAQ, y'all, negative 478.54 points. And that VIX shot up since the last time we talked to y'all. And now it's at 28.89. Now, the NASDAQ, this was like the worst it's been since October. And so those of y'all that were with us in October, don't act brand new, y'all. Do not act brand new. These kinds of things happen, and many of y'all were soldiers, 10 toes, and you reap the benefit later on. All right. So for sector performance, as you know, we track the top 3 and the bottom 3 of the 11 sectors. So for the top 3, we have utilities, health, and consumer staples. To me, that is looking a little pandemic-ish. Like these ones were the ones that were kind of rising to the top last time. And then the bottom was communication services, tech, and consumer discretionary. Y'all, tech, there was a huge sell-off. Like they were gutting tech. I don't know what y'all's portfolios look like, but it was feeling like a massacre. It definitely was. Now, for our pick performance, there are over 37 picks, aka SIPs. You can find those on our Instagram page at That Come Up Series. So we got TBT, which, as you know, we talked about that being a hedge for times such as these. For such a time as this, we got Nike coming in number 2, and then Target. I just went there today, y'all, right before the show. I was at the good old Target. And then for our bottom 3, we have NVIDIA, Lam Research, and Teladoc. So those are the bottom 3. And despite the blood in the streets, we had 2 52-week highs. That was TBT and JP Morgan.
Say it. Say it again, y'all.
JP Morgan had another 52-week high, y'all. They had another one. I didn't check yesterday, but they definitely had one on Tuesday. So yeah, and then we had Zscaler with the earnings. So there was a lot of activity. You know, I like to say all chips, no dip. Now we do have some dip. I didn't order the dip, but we definitely got some dip, and I'm ready to send the dip back. Like I didn't ask for this dip. I said all chips, man.
It's like you have like tortillas, and then somebody sends you like sour cream dip or something like that, and it's just like, no, this ain't us. This ain't the party.
No dip. But I like to think of it like this. The beauty in all this. So for those of us that were already in the market, yes, we were feeling some pain. But for those of us who were out, not in the market, now y'all are jumping in. So it's like, okay, it's like the market is saying no cousin left behind. Like they dipped so that they made a U-turn to come pick y'all up. So y'all better get in so that then we can keep going. Okay. So I like to think of it like that. So it doesn't hurt as bad. Mark, what do you like to focus on in times like this?
So one of the things, and if you notice from our pick list, we had like innovation, but with innovation, there also comes like, for example, risks because of the fact that as you see what's happening today, all the innovative companies that are out there on our list are getting wrecked. And the reason why that's to us, like for us that have been in the market. To the person who hasn't been in the market, yo, this is your golden ticket. Like every day that there's strong dippage like this is your golden ticket to enter into the market. And that's one of the beautiful things I love about, the market and activities like this called corrections or strong pullbacks. Personally, now we've gone from strong dip to now we've gone into correction territory. And naturally, you don't really last here that long. If you think about it, and I'll get into this in a little bit, but I like to think about things in which that are defensive. So if, say, for example, technology, consumer discretionary, and we'll even throw in little communications in there as well. If they've been moving the chains and everything else to the upside, and then all of a sudden they're coming back on the downside, we know some of the reasons for it, and we'll get to that in a little bit. But where I would like to focus are on the areas in which that aren't loved. And so I actually had two companies on there that gave you that actual defensiveness without having to play any types of significant sophisticated plays. One of them was JP Morgan. Now, JP Morgan has survived pretty much almost everything. They're like Teflon. And honestly, financials have been terrible for the past set of years. And that made them look very much so attractive as an opportunity. And I would be remiss if I didn't mention Goldman Sachs alongside with JP Morgan. Shout out to Zay, because he and I have this thing going on where I have JP Morgan and he's Goldman Sachs. It's an everyday thing. It just has to be. And then on top of that, there's this thing called TBT, and that's the 20-year ultra short pro shares. And what I like about that is, especially as you're starting to see that where these areas of equities are starting to come down, it's showing that, say, for example, treasury yields are starting to increase, which makes TBT an attractive position to buy. Now, I would not advise anybody. Clearly, I'm not a financial advisor, so none of the information I give you is ultimately regulated or anything like that. So this is just my opinion. In my opinion, I'm literally just saying that, possibly when we see these markets, you typically see that treasuries start to climb up. So as treasury yields start to climb, then you start to see that tech and other companies, they start to become a little bit unattractive. But the thing about it is, it doesn't last forever. Like legit, it doesn't really last forever. So honestly, I'm looking at financials along with treasury, that treasury pro share, ultra short, TBT. Things in which that are defensive that haven't really gotten as much shine. Pretty much people run over there to those positions to hide and also still collect profits. And then on top of that, they'll come right back.
So speaking of coming right back, we have some Black history that we're coming back to. Shout out to two people for right now. Carter G. Woodson. He started the Negro History Week, which then ultimately became Black History Month as we know it. Shout out. And let me see. And that was actually on the 26th is when that took place. And then we have Cassius Clay. He changed his name to Muhammad Ali in 1964 on February 26th. So that's kind of cool. That's what happened. Well, what would have happened tomorrow because today's the 25th, but y'all know. Okay, so we're bringing it back down to the island man. Okay, so we got Queen Nanny of the Maroons. Shout out. Big up Queen Nanny. She was born in Ghana, West Africa, and she was kidnapped into slavery and brought to the island of Jamaica, where she led slave uprisings for freedom and revolts against the British. Escaping from slavery led her to the mountains, where she joined communities of other freed enslaved people. She was the spiritual, cultural, and military leader of the Windward Maroons, and her importance stems from the fact that she guided the Maroons through the most intense period of their resistance against the British between 1725 and 1740. Queen Nanny planned and executed successful attacks on plantations and helped free over 1,000 enslaved Africans over her lifetime. According to the book Black Rebels, African Caribbean Freedom Fighters in Jamaica by Werner, this is what they say. A famous legend about Queen Nanny is that during 1737, at the height of the Maroon resistance, against the British, Nanny and her people were near starvation, and she was on the brink of surrender when she heard voices from her ancestors telling her not to give up. When she awoke, she found pumpkin seeds in her pocket, which she planted on the hillside. Within a week, the seeds grew into large plants laden with pumpkins that provided much needed food for the starving community. To this day, I love that meme, one of the hills near Nanny Town is known as Pumpkin Hill. She is held as a national hero in Jamaica and is credited with preserving African culture on the island. Queen Nanny is most visible on Jamaica's $500 note. So big up to all of our Jamaican and West Indian cousins. Y'all light yourself up in the chat. And also, Mark, did you know that when was it? A couple of years ago, was it 2018, 2019? I don't remember. I think it was 2018. Me and my family, we went to this mountain that Nanny was at, and we saw like all of the artifacts. She used to every single time they would raid a spot, they would take the rum and have a little drink, and so they like served us rum.
I mean, you got to check the rum. I mean, you got to make sure it's good.
Yeah. And there was just so much history in this one little spot, and we had to like go up the mountain in this like van, and it was hella scary, but we made it to the top. We saw the people, and I had just came at that time. I just came back from Ghana, I believe.
Okay.
All my trips are like running together, but I just remember like all of the connections between Ghana and Jamaica, and I was just blown away. Like, oh my gosh, it was just so evident. So that was cool. And for our other hero, we have Gaspar Yanga, first liberator of the Americas. So Yanga was believed to be a member of the royal family of Gabon, West Africa. He was captured, sold into slavery, and brought to Mexico, where he eventually escaped his change. Gaspar led one of colonial Mexico's first successful slave uprisings and would go on to establish one of the America's earliest free Black settlements around 1575. He led other stolen Africans to liberty and established the first free Black settlement in the Americas in the highlands of Veracruz. The settlement remained hidden for over 30 years, but it was eventually attacked by the Spanish. After years of bloody battles, the local government heeded to Yanga's terms recognition of the free Black settlements. In 1630, San Lorenzo de los Negros de Cerralvo, was officially recognized by the government, and the people left in peace. The settlement remains today in the Veracruz region of Mexico, appropriately named Yanga. So shout out to all of our Latinx and Afro-Latino cousins. Y'all light yourself up in the chat. Like big up yourself, because our money.
I wish I had lighters.
What'd you say?
I said I wish I had lighters right now.
I know.
Oh, by the way, just for reference for everybody, I mean, of course, me being HBCU, I have to know this. Carter G. Woodson, also a member of Omega Sci-Fi.
All right, so y'all can shout yourself up.
Yes.
Light yourselves up in the chat, big up yourselves, because now we need to talk about when our money tings are gone. Can we talk about these money tings?
Let's do it.
All right, so let's get into these questions. So we had so a couple of hours before the show, I like to put out a post on my stories to give y'all a chance to ask questions regarding like what news you all want to discuss. And so there's always a theme in the news. Y'all be reading the same stuff. So some of it, Mark, you already answered with the bond. So, but I think we could still go into it. So I thought it'd be cool because some of the questions are about SMH, my babe. Some of them are about ARKK. I don't have a name for it, ARK, but ARK is definitely on my hit list. I mean, I have it in my portfolio, but I don't know. We haven't defined a relationship yet. It's been making me money, so I'm not sure. I'll come back to that.
Sibling?
No, it's not that kind of vibes. It don't feel like sibling vibes. I'm not sure yet.
Let me know when you get there.
Yeah. It's still new, so it's hard to say. But you already know SMH has been on sale. I think it's going to continue to be on sale, y'all. So if you got in today, do not be shocked if there's still some dippage tomorrow, even though I don't know who the heck ordered the dip. Okay. So there's all kinds of stuff, Mark. So let's talk about So someone had a question, and I feel like you answered this on Tuesday and a little bit today, but like, let's just, for those that are just tuning in, let's just answer the questions as if these are all brand new. All right. So
Let's
first
do
one
it.
up, people have questions about bond yields, and then why does rising interest rates affect tech in the market?
Okay, so the reason why bond yields have actually stepped into the market. So a lot of bond investors. So let's backtrack a little bit. Why do bonds exist? So there's treasury bonds, and then there's such things as corporate bonds. Now they both pretty much consider themselves consumed around debt. So on corporate bonds, that's corporate debt. On treasury bonds, that's the U.S. Treasury, and that's the U.S. Treasury debt. So essentially, when the United States carries on debt, it gets formed into formulated into a bond in which that you can hold it. Now, here's the difference between a corporate bond and a treasury bond. Corporate bond, they can be defaulted on. A treasury bond is backed by the United States government, which is very rare, like excruciatingly rare, to find, say, for example, a country, especially the United States, that literally defaults on any of its debt. I don't think that that's ever happened to my knowledge in my existence, but I mean, it's not to say that it hasn't happened. So, okay, so here's the part. A lot of folks look at the bond market as a place in which that it's like, okay, hey, it's safe. Whenever I need to run away from risk and run to safety, then I can go towards the bond market. Okay, nothing wrong with that. Now, there's this thing, there's a few treasuries there. So when we look at the bond market, it goes all the way up from, it already starts at 2 months and it goes all the way to, let's say, 30 years. So there's a bunch of different, there's a flavor out there for everybody. And so the one that matters, though, is the 10-year. The 10-year is the complete benchmark for everything. So if you think about it, the 10-year is a benchmark for pretty much interest rates. So it's like kind of like that wonderful medium of being able to also help dictate or help folks understand and illustrate what, like, say, for example, what retail interest rates will look like, whether it's credit card, auto, as well as home, as well as business loans, all of those types of things. And so essentially it's like, that's one of the ones where if you notice, everybody pays attention to every country's 10-year treasury note. Now, what started happening? Well, we started seeing that some economic factors started to show up as good reads. Like, for example, you saw that the jobless claims was a lot lower. Little did we forget that there was also, say, for example, a pandemic. And on top of that, there's also folks in whom which that just went through a terrible storm, cold storm in Texas, in which that they probably also didn't file their jobless claims because of the storm. So better jobless claims. So essentially what they're saying is that the economy is starting to wake up and roar back. Now, with that being said, the economy has the United States has carried on X amount of debt. We had quite a few stimulus checks. We also have another one coming through. So we also price those in. So when you see a stimulus, don't be surprised if you see, say, for example, treasuries drop, because of course, that's more debt that's coming in. Now, what typically happens is there's typically like an advertisement for it, for bonds to be bought. And then there's what is called an auction. And an auction, just like how, we all know it, except that it's not like, okay, everybody raises a paddle to mention a number like we're going to get out. What we're seeing, though, is then after the auction, there's what is called a settlement date. And then the settlement is that's where pretty much everything that has been auctioned for, everything that has been bid for is ultimately now settled. And now we start to see the yields rise. Now, one of the things is Jay Powell just had his testimony in saying that, okay, we notice that everybody's talking about this whole inflation thing. Don't worry about it. We're not there yet. He said that 2 days in a row now. Did the bond market investors listen? No. Did CNBC and everybody else in whom which said it brings up tons of talking points listen? No. So they kept talking about inflation. And then ultimately, there's this belief that across even institutional money, where they're saying, hey, inflation is going to rise. We haven't seen it yet. You'll know that you've seen inflation when you go to your nearest grocery store and you start to see that certain prices have significantly started to skyrocket, either maybe due to their scarcity or, say, for example, just because of the fact that the economy is getting better. Now, in some cases, you will see that in smaller areas, but we're talking about the masses here. So then there's this other thing called the yield. Now, the thing is like there's this yield that's been steadily rising. We were at 0.9 in December, and now we're all the way up to, I think it's 0.5. I can check it for the Treasury. Actually, we're at 0.49. So, I mean, I guess we're just a little bit under 0.5.
Mhm.
In my opinion, I think that you have folks out there that are ultimately trading this up, but I want to show folks something just for the sake of it, shall I?
Yes, let's get
Because we're going into it.
one. Okay.
I know that there's going to be a lot of information, but hopefully I can miniaturize the data and also make the data human for everybody, so that way there's understanding.
Yeah, you're
So
good.
here, this comes from the treasury.gov. If you ever want to pull this up, I'll do everybody a favor and I'll put this in the chat as well if you'd like to follow along. So, and shout out to Zay, because he also brought this up in today's meeting, and then I helped give a little bit of flavor to it. So if you look at, there's an announcement date of when the auction takes place. So that was on February 3rd of this year for the 10-year. So it was 3, 10, and 30-year. Then on top of that, you had, say, for example, you had the auction date, which took place on the 10th of this year, February. Then there was a settlement date of, and I'll blow this up for everybody. The settlement date took place on February 16th. Now, why does that matter? Why does that settlement date really matter to anybody? Well, if you go back and check the charts of some of your favorite stocks, go and look and see what happened starting on February 10th, and then really looking at seeing what happened on February 16th. You'll start to notice that there's something that's playing out where essentially you start to see that this increase in 10-year starts to rear its ugly head. And then on top of that, you start seeing that equities themselves start to drop.
All righty. So I think it was Kathy Wood, not Kathy Woods. I've been seeing
Yeah,
people.
why does everybody say Kathy Woods?
It's Kathy Wood. No. She was saying something about the 60-40 rule changing, and how before it was like 60% stock, 40% bonds, and basically it's like you do 100 minus your age, and then that's kind of like what you would put stocks in versus bonds. But now she's saying that it will move to, it's going to more likely be, like crypto will take the place of bonds. The question that I have about that is, if usually when bonds are up, stock is down and vice versa, but when crypto is up and stock is up, then they both just up.
We have a fiesta.
Right. So I'm just like, are we moving away from this need to balance? Are we just going to let it ride? Or, do you have any thoughts about what Kathy is, what she's alluding to as far as future?
I think that what she's alluding to is those are going to be the most attractive places in which that people will want to be in versus, say, for example, being in a treasury bond, or say, for example, putting your money in a high interest savings account. I mean, kind of like a bond. So I would say, she's 100% right. I think that there will be other places. I think that where crypto is starting to replace, it's already starting to replace commodities like gold, silver, and those things, like completely. Like, who buys gold? Nobody. And really, when you see that with, like, for example, places like Ethereum and Bitcoin and a few other altcoins, that where people are literally running there versus putting their money into commodity markets. Now, when it comes to treasuries, I think that they will still forever exist because you have countries that buy up other countries' treasury bonds as it pertains to leverage. Then on top of that, you also have like people that buy it up just so that way they can have a little bit of safety within their portfolio. Because really, cryptocurrency isn't a safety at all. Companies give you somewhat of safety, but yet at the same token, they're not insulated. So essentially, you need something that can be counter of what exists. And if you have crypto and equities trading alongside with each other, then there's really no difference. There's no difference there. So essentially, that's where it's like, okay, hey, there's no safety. So where else can I go? And that's where you look towards the places like the bond market.
Okay. So next question. Hold on. All right. So up next, Well, I mean, I guess if we want to stay on Kathy, there's a question about why is Wall Street going after Kathy and what does it mean for ARKK? And additionally, there's also like a footnote about that. Like Jim Cramer keeps coming after Kathy. Um, I think personally, I think it's his way
Wait,
to
who keeps coming after Kathy?
Jim Cramer.
Who's that?
That's what I'm saying. I think that it has a lot to do with like trying to remain relevant. And I don't have anything against, Jim, but it's just like at the same time, like, hello, like Kathy's track record speaks for itself. So what are we even talking about here? But anyway,
I think that you have a bunch of folks out here that have a issue with Kathy Woods because of the fact that she represents something in which that they're not.
mhm.
Honestly, and it's going to be interesting to see how it all plays out. But I think that when you look at what ARK Invest brings to the table, they do not represent the actual, like, of course they're Wall Street for sure, but yet at the same token, they're not really Wall Street, like that bro culture, that type of attitude and mantra. And then on top of that, you have folks out there that are index related, and then you have folks in which that are kind of like thematic and then growth, a different like thing, different types of packages for everybody. So if you want to be a part of the index, then you'll go towards index funds. If you want thematic, then you're going based upon specific themes, then you'll take that. Or if you want, you will take, say, for example, something a little bit of both, but you have some active portfolio management. And I think that where Kathy and her team are literally headed is more so towards themes. And if you look at their themes of their ETFs, it's very, very clear. And
Mhm.
that's ultimately what the new generation of investors really, really want. And I think that that really poses a problem to a lot of the other ETFs that are out there, a lot of the other funds out there, because of the fact that they don't have that yet. I think that when we look at it in perspective, I think that they will get on this train. But then at the same token, when you do that, it's kind of like, well, now you have to give deference, or you have to pay homage to ARK Invest and Kathy Wood and her leadership of what is it that they've been able to do to say that pretty much she and her team were right.
Yeah. And also, it's one of those things where I'm just, I wouldn't say sensitive to it, but I'm aware of it just because of, women being in this space, and then not to mention she's dominating and she's remaining in her, feminine reign, like she's just on her throne, and it could bother people. And also that's just another comment on what innovation tends to do. Like it disrupts, it ruffles feathers. And I see so many similar themes like that, even with the come up, just stepping out on that innovation tip. So
I will
moving.
say this though, a wise person once said that innovation is what separates leader from follower. So
All right. So let's see. We already talked about the bond market. And do you have any further comments on inflation?
I think that ultimately that the Fed said that they're looking to that they will be looking to get inflation up to 2%. I mean, and that's fair. I mean, average, especially if you look at the inflation rate for the United States, has been about 2% for quite some time. And I think that we will get there. I mean, but that's ultimately when we start to see strong economic signs and really, really strong, undeniable signs that the economy has gotten stronger. With that being said, it's like if you really go back and look at equities or look at stocks, a lot of the companies that were out there. I mean, honestly, even in, say, for example, a 2% inflation market, as well as with also bond markets doing their thing, we had companies that were still out there crushing it. I mean, even when you had the bond market or the 10-year at about 3 or 4%. So honestly, it's like I said, you have folks that are running from one side to the other just because of the fact that essentially you're seeing these moves because there's a lot of money that's moving. But yet at the same token, I mean, really, where are you going to go to get, say, for example, a 20% return, or anywhere from 20% or 15%, or even, let's say, 45%? You're not going to get that in the bond market at all. So, I mean, enjoy it while you can now. And ultimately, it's very timely in the sense that normally when we see these types of mega auctions and settlements that take place, especially getting closer towards quadruple witching, I mean, honestly, you start to see a lot of volatility take place. And that's really what you're seeing. And I think that ultimately triggered the correction for this market. in which that I think that we're coming at. It's like, and here's the funny thing, the correction, being in a correction is a lot like being in recession. You know, you never know. Like the moment that you start to realize that you're in a correction, the correction's over. Just like when you're in a recession, when you realize that you're in a recession, the recession is over. You're coming out of it.
So I think it'd be cool. You were talking about just a moment ago, you were talking about ARK and like some of these other ETFs. Could we look at a comparison chart of SMH versus ARKK?
For real?
Yeah, that is a request from one of the cousins, and they're wondering what the potential upside of either one is.
Potential upside. I mean, I feel like that's not fair, but okay.
Hey, this is what they asked, you know. I'm just trying to get the people what they want.
Okay. We will do a comparison between ARK and SMH. Okay. So here we are. Here is ARK and here is SMH. I'll walk us through from year to date. Here's where we sit. And ultimately, we're pretty much, ARK is still outperforming SMH as it currently stands.
ARK is purple, everyone, just in case.
Yeah, ARK represents the purple, SMH represents the blue. I wish I could change color. Yeah, there we go. Let's change this color. Let's go to a deep red and make you a little bit bolder. There we go. That should be better for everybody to see. So let's see here. Looking at this, it's like you see that ARK typically and SMH, they kind of trade alongside each other. I think the biggest difference is, and here's where the change comes into play. With ARK, the reason why ARK is kind of beating out SMH is because some of those same good companies sit inside ARK. Like, for example, you have NVIDIA that sits inside, maybe not ARK with a K, but maybe ARKG, or not ARKG, but ARKQ, as well as ARKW. Butter, come lay down. Lay down. Thank you. Then on top of that, you also have, you know, some of the high flyers like your Teslas, your Squares, your Rokus, your Teladocs, all of those companies, in which that in here, it's like we have in SMH, you have TSM, which is rocking, you have NVIDIA, which is rocking, but then you have Intel, which isn't gelling. Then on top of that, you have Qualcomm, AMD, Micron, Lam Research, and those are all great companies as well. But when you stack some of those companies and play the who you got game, your five versus their five, it becomes a little bit more challenging there because of the fact that, you know, honestly, a lot of those other companies that sit inside ARK are just too dominant. So here we are year to date. And then let's look at it from, and I'll also do some things because I know that people are going to be asking about correction. So let me bring down ARK for a second. So this is if you look at it over a year's worth of performance. And, you know, really when ARK started to come onto the scene really last year and really start to really blast off last year. But if you think about it over a 2-year also, you know, ARK, like there was this inverse between ARK and SMH, but they kind of always kind of traded together. Now it's like ARK, like I said, the companies have just become too dominant within ARK. And yeah, it's not even really a game anymore.
And there's also diversity, quote unquote, diversity between what's the holdings in ARK versus SMH. Like SMH is solely semiconductors, you know, so that also makes a difference in performance.
Yeah, so here's the interesting thing. I'm gonna drop ARK out of this chart because as you can see, they kind of trade alongside each other and in tandem for the most part. But let's look at something because I know that we're probably going to be looking at like things like correction.
Okay.
So, and I want to put in a actually, I want to bring in actually, let's just look at the NASDAQ, shall we?
Yeah.
I want to look at the NASDAQ because this is really where it really counts for everybody. And I want to look at some things here. Notice here, I'm going to see if I can draw a box, which is, you know, not normal for Mark, but
I like when you do this, Mark.
Oh, okay. And then we have this. But then there's also this timeline where whoa, come on now. Don't do me like that. And then on top of that, we can come all the way back here to around the October timeline here. where we saw this significant correction. So this was a significant like pullback here within the technology sector. And you can look at it across the board, because even if I look at, say, for example, an SMH, I'm probably going to get some of the same type of activity in which that you see that's taking place. So pretty much similar, right?
Mm-hmm.
So looking at this, we see that we're at levels now in which that we've now retreated to. Now, earlier today, you saw the NASDAQ actually drop down to these levels. So it closed on this date of, oh man, I'm not even getting my dates over here. Let me see if I can, Zoom is like trying to get in the way of everything. So on January 29th, we saw that we came down to our lowest, and that was, we closed at 1370, right?
Mm-hmm.
But then over here, if you look at where we came to our lows, we came all the way down to the 1366 in the NASDAQ over there on that left side. If you can see that bar, that's a very telling sign in which that we came across, but yet we didn't end here. So we actually immediately bounced off of that. And then essentially here we sit. Now I can throw in some indicators for everybody, so that way you can kind of see exactly how is it that we've moved so far.
Yeah.
We're still within the band, but we've kind of just briefly just tapped the bottom of the band.
And remember, this is the NASDAQ, y'all.
This is just the NASDAQ. So the NASDAQ is most likely, if you're investing in a company in the stock market, then essentially you're going to see that essentially a lot of those companies look almost identical to the exchange that it sits on. So whether it's the NASDAQ or the S&P 500, so if I threw on the S&P 500, they would look exactly the same. And so that's what you're seeing right now, where you're seeing that tech is ultimately, quote unquote, getting wrecked. But really what you're seeing is, a lot of technical is happening around this time. And essentially we're coming back to levels in which that, okay, hey, out here, when you get to this area on a chart, when you see that your chart looks like this, and I'm going to try to zoom in here, when you get to this,
Mm-hmm.
the positions kind of look like no man's land out here. So the exchange, we're kind of like in no man's land. And we kind of seen this before, right? Because we saw these grooves here where we kind of like tried to go even further. We did the same thing here. And just like that, we kind of just teetered down. The same thing happened here within the NASDAQ. So I would say that these are the levels to definitely be watching. But for the most part, we've kind of reached that pinnacle. The lowest you'll probably see the NASDAQ probably touch is probably at the very, very high 12,000s. And then essentially we're going to bounce right back off and then essentially go. Here's another thing to look at, if I can just clear all the drawings.
Mm-hmm.
If you look at from the low point, look at how many days it took for the NASDAQ to, really recover from this. You ready?
Yep.
1, 2, 3, 4, 5, 6, 7 days.
A week. Mm-hmm.
It literally took 7 days for the NASDAQ to literally recover. Now let's look at the days from the high all the way down to the low. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So today was day 9.
Mm-hmm.
So if you think about it, from February 16th, where pretty much we were at the pinnacle,
Mm-hmm.
pretty much at the flat line with the first day of red, from the 16th all the way till today, the 25th. That's not a lot of days. And ultimately what we're starting to see within the NASDAQ and across multiple different exchanges is that essentially you're looking at some significant upside that can definitely come into the market from here. So I'd be on the lookout.
Lovely. Lovely. Okay, so sorry, this question is funny. They're like, when are the red days going to be over?
And that's the thing. It's like many folks are in like 1 to 2 year long positions, and yet literally, y'all, it's only been like 9 days.
That's really good perspective.
It's literally been 9 days, like 9 days of red, but yet your positions have over 700 days worth of time.
Now, someone, and I cannot remember who it was, but someone was asking me today about, they were saying like when you are trying to build liquidity,
Yep.
right? And you don't have that many contracts, So you're not really able to like shave off. You know, like what is the, trying to paraphrase here, like what is the mindset? Because they're hurting today and they're not seeing the 500%. They're not seeing, you know, not even 300%. And some of these positions have been held since November. So what sage advice do you have?
One of my favorite proverbs, which is a Chinese proverb, says, all great things take time.
Mm-hmm.
You know, and that's what's going to, and this journey is going to separate what separates folks who want to be rich versus folks who want to be wealthy.
Mm-hmm.
Folks in whom which that they go the route of wanting to be rich, they want to go quickly, and essentially they want to be able to like literally immediately be there like a Pop-Tart in a toaster, or say, for example, oatmeal in a microwave.
Mm-hmm.
But I mean, really, you know, the most savory things in which that are there, the things that, you know, honestly give you the most amount of flavor and the most better return when you build wealth, it takes time. And that's the journey in which that you're on. I mean, you may not see the 500% return right now, or whatever the return benchmark that you've set for yourself in these positions. But yeah, that's right now. And the reason why it's right now is because that's literally what you're seeing, what's happening in the market, and your positions just happen to be a part of that. But if you let your position do what it needs to do, and I'll go back to weather folks' expectations. How about we do that?
Yeah.
So I'll come back to the chart, because I always say, let the data speak.
Let it speak.
So let's look at, say, for example, a company like Apple, because Apple is the most beloved stock of quite some time. Now, think about it like this. This chart right here looks ugly because Apple's been going through it even longer than everybody else has. If you put it into perspective, here's their chart over the last 6 months. It's been kind of crazy for Apple as of lately, right?
Mm-hmm.
Now, it kind of dates us back all the way to the September 4th, in which that we're looking at Apple, where we see some of the same activity, and lo and behold, here we go. But here's an interesting thing. When you come out over, say, for example, a 1 year, Apple started out on February 25th, they started off at $72, and now they're trading at $120.99. If we go from 2 years ago, then 2 years ago, Apple was trading, and mind you, you have to do the multiplier of, I think it's times 4 to actually get the stock value. But essentially, that's about $43.74.
Mm-hmm.
Now, $43.74. I mean, this is where we're at. So essentially, it's like it looks a lot easy. It looks a lot uglier when you see this. And I always do this as an illustration for people. When you zoom in, everything essentially looks a lot more, you know, effective. I mean, because it's affecting you right now. But then when you come out and say, okay, hey, I'm going to go from 1 day to 5 days, from 5 days to 1 month, from 1 month to 3 months, from 3 months to 6 months, from 6 months to a year to date, well, not year to date, but 1 year, from 1 year to 2 years, and then from a 2 year to a 5 year. Would you still have invested in this company? Yeah, you're seeing some of the pain here on the backside of it and everything else. But there's been some other things that have been painful for Apple along its path, and it's got the scars to show it. But yet at the same token, you know, where it started is a lot different than where it is today. And that's how you're going to have to think about, for example, your portfolio and your positions. You know, when you put it even in a 2-year perspective. And here's the thing, I can do it for another company. What's another company that I should take on?
Look at, well, I won't say Tesla.
Mm.
Look at Nvidia.
Oh, somebody caught that Tesla bug. All right. So when we look at it, Nvidia, right? Nvidia had a terrible day. Again, 1 day to 5 day. 5 day. Oh my gosh. That was some huge institutional money that was ultimately like selling out. And then on top of that, 5 days to 1 month, 1 month to 3 months, 3 months to 6 months. Okay. Looks kind of like some type of machine that you see in a hospital. But then we go to a 1 year. that tends to start to dissipate. And then we go from a 1 year to a 2 year. Now, of course, it's easy to see some of this choppiness, but again, NVIDIA was at 157 and now it's at 532. People are screaming for AMD in the chat, so I guess I'll do that.
Yeah, look at AMD. Dang, I just looked over at the chat.
So again, it pretty much looks similar to NVIDIA though, but AMD, one day to 5 days to 1 month, 1 month to 3 months, 3 months to 6 months, 6 months to a year.
Oh, that is wild looking.
And 1 year to 2 years. Again, that's one of the beautiful things in which that's one of the reasons why people buy it, because of the fact is all this, some of this choppiness that you guys see that creates all this volatility within these stocks is one of the reasons why each and every single one of you love them. Each and every single one of you love them because of the fact that they give you the types of returns, but yet at the same token, the question is, can you stomach the roller coaster that also comes with it? And that's the biggest part. You know, it's like when you put yourself in such a long-term position, it's very much, this is where the discipline comes into play. Stay put. There's going to be a ton of things out there that look attractive and everything else. And everybody immediately wants to become an active portfolio manager. I didn't really start becoming active portfolio management within my own portfolio until I actually got good at it, until I actually was able to start saying, okay, hey, well, I can move to this one, to this one. But even then I choose not to, because of the fact that, you know, things do better. There's a person in whom which that literally went from, you know, 0 to 1,000% by just staying put, and then staying put even further and possibly just rolling it to a further date, and then going from 1,000 to 3,000% return. You know, and it's just that simple. They didn't have to do a bunch of active portfolio management. They didn't have to waste a bunch of time and going through trade after trade after trade after trade. They didn't have to do all that. You don't have to over trade in order to be great. You just don't. You know, you pick great positions and then ultimately you just stick to it. I mean, and then ultimately let the data ultimately validate it.
Right, because we already had that conversation about if the thesis breaks down what you're supposed to do. You can look at that episode. It's called The Setup. Somewhere.
And I love roller coasters. So that's one of the main reasons why I like an AMD, or I love an NVIDIA, or I like an SMH or anything like that. And it's also because of the fact of the thesis. You know, many folks have invested in or have chosen to do investments, but then really, have you actually studied the thesis? Have you actually designed your thesis? Many of you understand the catalyst of the success, but have you actually done the thesis to what is it that ultimately makes it great?
Okay, so the next, and then also for context, and I think also there's been, you know, like some comparison, because you hear about other cousins, you know, getting 500%, and then you're looking at your portfolio and you're like, I'm not seeing that. And it's like some of that happened at the height of the pandemic last year, where it was so easy to make money. And so like now you're getting in, and it's going to take that same level of time. If you are in the liquidity phase where you are like, you have a smaller amount of capital to work with, me personally, what I would personally do would be to, when I see profit, when I hit my target percentage, whether that's 100% or a little over 100%, whatever, I'm taking profits and I'm going into the next position, because I'm trying to build up my reserve so that I can then take action on multiple digit contracts and not single digits or low double digit contracts. I'm trying to get closer to the higher digit contracts for double digit. And then from there, then go to 3 digits and then 4 digits and so on and so forth. And that psychologically may work for you. But again, you get to think about like what kind of investor, what kind of trader you are. Are you going to sit there and be patient, you know, while we have these dips? Like, because this really is where the discipline is built up. There's some other things that you could be doing while we're having these dips. Researching is like the number one thing. Talking to other cousins about like planning, reviewing your 70-30. There's all these other things you can be doing. Like, even if you're not going to be able to participate in quadruple witching, or even right now, you need to be shoring up, like thinking about, you know, the companies that are on your hit list, that you're going to be going after and what your plan is, and then stick to that plan. You should not be laying idle. You should not be stressed out. You know, you should not be freaking out. You should be, at this point, like, really, if you're investing this way, there should be some leisurely vibes coming, you know, like where you're just sitting back and researching.
You're in a position for, let's say, a year.
Mm-hmm.
That's the point where we're at the point of, yo, there is no excuse to literally say that you do not know what your next position is going to be in a year from now.
Mm-hmm.
That means that if you're in a position for, let's say, a 2-year trade, but yet you're going to get out in a year or year and a half, that means that you have a year to a year and a half to find your next play. Or, you know, if you're doing the rolling fours method, then you got 3 months to figure it out. So you don't really have time to literally sit back and watch like all the day-to-day activity and ultimately be in your feelings about it. You just don't. I mean, don't get me wrong, it sucks, because of the fact is like you're seeing that, okay, hey, I'm taking some L's here. But here's the thing. Have you really lost yet? You haven't lost until essentially you say, okay, hey, I'm going to hit that sell button. Mm-hmm. And then ultimately now you have to, that's a realized loss. These things are going to take place. If you look at any company on any chart through the history of its, since its origin or whenever, you're never going to see a direct straight line that goes directly up. You're never going to see that. In the history of the stock market, you will never see a stock, and this is Mark stamping his words on it. Okay. You will never ever see a stock in the stock market that has only gone nothing but up and has lasted in the stock market. You will never see that. All stocks in the market will have their day in the sun in which that they can be great. But then there will come a point in time where, one, people will want to take profit. That creates a dip. There will come a point in time when people believe that this is too overvalued. There will come a point in time where they probably don't perform as well, or they don't meet expectations by the folks because of the fact that the expectations have been set so high. There's always going to be a moving goalpost in which that creates an opportunity for people to sell. There's going to be economic factors, going to be geopolitical. Those things are going to happen. And at the same token, the question is more so in the sense of, did I sit back and become afraid of the market, or did I sit back and say, okay, hey, am I going to take advantage? Like, for example, there are many people out there that if you go out to any store and see that something is 90% off or 50% off or even 20% off, you're immediately buying. Why? Because of the fact is, you know that the product is good, you know that the service is good, and essentially you trust it, and it's like it's an opportunity for you. Here's the exact same difference, or here's the exact same thing. And I'm going to say exact difference. Here's the reason why. The thing that you went and bought, that service or whatever it is, or that product, is going to depreciate. The thing that you bought and that is a great investment, and you know it's a great investment, is going to make you money. Mm. So essentially, it's like, even then, it's like it's going to create opportunities in the market for other folks to step in as buyers. That's what, I mean, for folks in which that need a little bit of a history lesson, when you look back at in 2020, when the market dips so significantly, and we're not going to have anything close to that. And if you look to any of the smart people that are on Wall Street, they're not talking about a crash. They're talking about literally correction. Kathy Wood said it. Hell, even Jim Cramer said it himself. Correction. You know, these things are bound to happen. And the thing is, it creates a buying opportunity for folks in whom which that didn't have the opportunity, and they sat the sideline waiting to get in. Think about that. If you already have folks in whom which that have been interested in buying the stock and they just take profit, 9 times out of 10, they believe in the thesis of the company and they're probably going to come back in. But what it also creates is for new buyers who have never been in the position before, and now they can step in as well. That's what the market is. So again, it's okay. Take a step back and breathe.
Yeah. Even when you're negative, you know, on AMD, for example,
it's okay.
It is okay. You just gotta.
It's not about where you start. It's not about where you're at right now. It's about where you will one day finish.
Yeah, where you're going. So we are at the top of the hour, Mark.
Word? That fast?
Mm-hmm.
Oh no, we got to give him more. We got to give him some more.
Okay, well, there are some other questions.
And for the folks that are in the chat that are literally having discussions about everything else that's non-revenue generating, I'm gonna need you to focus.
Ooh.
Because you're about to get some heat here. So focus. Let's go, Jolene.
All right, here we go. Let me see. Teladoc's earnings and the major drop. Is this a viable SIP coming out of the pandemic? And then one other earnings related question was NVIDIA. So what's the logic of it dropping after great earnings?
So if you
NVIDIA
look
has a pattern though, doesn't it?
Yeah, I was gonna say NVIDIA has a pattern. So naturally, when you see NVIDIA, they do run up going into its earnings, and then essentially the stock settles back because of the fact that people just take profit. And then a few weeks later, a few days later, then what happens is that you'll see the stock climb right back. And it typically is around the same time that we see that the activity really starts to sink in for like around quadruple witching periods. It's something weird about NVIDIA, but they're always like right on time where it's just like, oh, okay, we're going back up. The thing with Teladoc, they had a pretty blockbuster earnings. They did very well. The thing is again, the stock ran up significantly high during its earnings or before its earnings, and the stock needed to settle off, and hey, there it is.
Someone asked, do we play leverage 3x ETFs?
You could. I mean, if you look at CWeb is a 2x leverage, but then keep in mind with that, it's like it can also come double the pain. So yeah, I would say you could, but I would just say be very cautious and careful.
All right. Someone says, when is Tesla dropping this ride share? How will the sell issue potentially play out?
We all just have to wait and see.
Let me see. Okay, some of these are just hilarious comments.
Are we looking at the questions from earlier that you had?
Yeah.
So I wanted to mention something about the Biden executive order.
Yes, yeah, that was one of them.
So a lot of folks have been worried about, say, for example, the chip shortage. And I think that we kind of caught wind of that out of all companies today. It really started to take place when we looked at, with Tesla, there was word that Tesla had to halt its activities in California. And I think that also, along with Ford, GM, and some of the other providers out there that wrote to the White House, they're like, okay, hey, you got to do something now. Mm-hmm. So I think that's a very good thing. But I think the biggest thing that would ultimately resolve a lot of this is ultimately going to the table with China and literally coming forth with a deal. This is like a Band-Aid on the process. But in the grand scheme of things, we're looking at, and sorry if you hear Butter's feet prancing in the background. He's just pretty active today. I would say that honestly, it's like, with this executive order, it's going to be about 100 days out or something like that, where they have to do some gathering of information, but it sounds like they're going to do some supporting as it pertains to price. But I think that looking forward, I think that the real major issue is the US and China have got to come to the table and, formulate some form of a deal and negotiate. I think that's where it's really going to come down to.
Someone asked, basically, when is it a good time to buy options way out of the money for those who can't afford a higher premium?
I mean, naturally, what I would always recommend for folks is if you can't buy a position and if it's way out of the money, you have to come forth with a little bit of reality. And understanding that if you're taking a call that's significantly out of the money, you're bringing on more risk to the position, even if the expiration is way out there. So I would just say that in perspective of looking at your risk. But for the most part, I mean, if you're playing it for the momentum ride, just so that we could build more liquidity, you can do that. But like I said, be cautious. Be very cautious.
All right. Someone asked, which sectors would benefit if the stimulus checks are approved?
Say that again.
Which sectors would benefit if the stimulus checks are approved?
The ones that are in correction right now. I mean, yeah, literally the ones that are in correction right now. Those would significantly benefit. But then at the same token, retail would probably benefit.
Mm-hmm.
I think that with the stimulus check will ultimately make bonds a little bit less attractive, or the yields less attractive, because essentially, there's more debt that gets added on. We print more money. I give everybody a challenge. Go look at the value of the US dollar and go look at that chart, and also compare that towards the US 10-year. You'll see an interesting tale of a story. And then also, if you want to, for even extra credit, go ahead and compare that against the NASDAQ chart.
Someone asked, could this be the end of the run for the tech sector?
Okay, no, it's
Never.
not. I think that we're just getting started with this run, especially since you're seeing how these companies are becoming more and more sophisticated. They're starting to add more value to they're starting to return value to their investors. And here's the interesting thing. Has anybody noticed that we haven't heard anything about like these large tech companies talking about stock buybacks yet?
We have not.
We've heard some of these tech companies talking about that they've increased their dividend,
Mm-hmm.
but we haven't heard anything about stock buyback or stock repurchasing. I'd be on the lookout for that.
Okay. Best Buy firing 5,000 employees. Does this mean anything?
No, I mean, essentially it's like, you're looking at, a lot of times you look at, and it sucks to say this, but you look at, the things in which that you're decreasing your operating margin and ultimately increasing profit margin to return back to shareholders, or to boost shareholder value. And then on top of that, you look at it in saying, okay, hey, we're a little heavy when it comes to, our overhead costs. So what they're doing is they're cutting overhead.
Okay. Tesla with these, factory shutdowns of sorts and the parts shortage.
I mean, nobody's exempt. I think that it's great that Tesla was able to last this long, and it sounds like they have a pretty good logistics to literally say, all right, well, we literally have a little bit of supply. So I think that they've done it like a 2-week hiatus or something like that, if not shorter. Mm-hmm. And pretty much, I mean, the difference between Tesla versus Ford and GM is that Tesla makes its stuff to order, so it goes direct to consumer. The difference between them and, say, for example, the rest of the automotive industry is that most of those vehicles are made and then they're brought to, say, for example, a car lot, or some type of showroom at a major auto dealer. With Tesla, you don't have to deal with any of that. So that shows you a great sign in exact immediate demand, supply and demand, when you think about the economics behind it. That's showing you that there's a huge demand definitely still for Tesla across the board. But I think that one of the beautiful things that we saw Tesla do is build factories worldwide and continue in that process. So that way, essentially, even though that they may be hitting issues here in their California Fremont, which represents like the US of especially the West Coast, or pretty much the whole US for now until we get the Texas plants up and going. That's showing that there's a huge amount of demand there. But when we look at what's happening in Europe, and when we look at what's happening in Asia, I don't see any slowdown there. So I think that they're fine.
All right. So was it like a couple of weeks ago? You had a very infamous tweet on Twitter where you told a particular CEO to zip it.
Have a tall glass of,
Yes.
Yes.
What do you think about
the SEC investigation?
Yes, and his comments on.
I kind of spoke on this a little bit. I think I spoke about it on Clubhouse, and I think I also spoke about it on Instagram. I mentioned it also on my tweet, and I said, look, man, you've already got hit once with the SEC violation for the whole private or going private or funding secured. I get it. You're a CEO, you're still a person and everything else. But like I said, if this were Tim Cook or anybody else, would they be held to that same standard, or would they not get hit with, some type of, issue from other folks? You're a CEO of a major Fortune 500 company now, since you're in the S&P 500. You are also one of the most polarizing people that has a very strong cult following for your company. And a lot of folks listen to you because you are quite the thought leader. You're smart, you're brilliant. Mm-hmm. But yet at the same token, it's like what you're doing is sometimes immature, because of the fact that what the world and what the market, and as well as what your industry needs, is leadership. It doesn't need you tweeting about, say, for example, what's happening through Wall Street bets or anything like that. It doesn't need you spawning those conversations. You're not Chamath, so stop acting like you're him. You're totally different. Chamath does not run a Fortune 500 company. Chamath is not that brilliant as you are. And ultimately, it's like you can be doing way better things with your time and fixing some of the issues that are at Tesla. And there's quite a bit that are on your plate. And I get it that you're trying to run off and like also, discipline folks like Vlad from Robinhood. But you can't do that and ultimately look like you're the person that ultimately comes off scot-free. You too also must take responsibility and accountability for what is it that you say and what is it that you do. And so spawning a bunch of folks and knowing that they're going to buy things after you tweet them or after you talk about them or bring them into the forefront, that's part of the thing in which that you got to take on as it pertains to being a leader or being one of the folks that's well respected. And it's more so in the sense of kind of like making yourself not even involved in those conversations is probably best, because just like what you did with Bitcoin, and then on top of that, well, now it's like people came after Tesla. Now they nailed Tesla against the wall when they found out that Tesla bought $1.5 billion of Tesla of Bitcoin, and then when Bitcoin fell, then now Tesla falls, and it fell hard. Now, let along with the rest of the auto industry, but yet at the same token, that was one of the factors. So that's why I'm saying it's like, it's more so in the sense that, you just got it, like you're held to a high standard. And this SEC investigation, I wouldn't take too strong, but I wouldn't take it also too lightly, because there is natural precedence that was said that, hey, if we find any issues of you, and if we see that there's repeat issues, then you could be stripped of your CEO title. You've already been stripped, I think, for a year from your chairman title at Tesla. Now, if you're stripped from your CEO title of Tesla, then that means that you cannot leave the company. And then that can ultimately significantly affect the stock. So it's just more so in those things where it's just like, just in simple terms, just to, if Elon is ever watching, if this ever gets out to Elon, just simple thing, grow up.
Your boy, I'm not going to say his name. Your boy wants to know, is SMH going to give 10x or nah? I can't tell you who that was.
I think I know who that is. I like my chances with SMH, but then at the same token, it's kind of neck and neck with SMH and ARK.
All right. Oh, someone wanted you to show how you would go about putting a put on Tesla.
Put on Tesla. How fitting. Mm-hmm. Okay. I'll do it pretty quickly.
Yes. And then we can wrap it up.
Okay. So give me one quick second. All right. So let's say I wanted to do a put on Tesla. So naturally what I would do is, here's Tesla. I pulled up Tesla on the chart. Or
can you make it bigger?
Okay. Is that better?
Yes.
All right. So then we go to the options chain, and here through the options chain, you get to see pretty much everything. They try to get me to look at this.
It's hella small. It's hella small. Thank you.
Okay. So here we are looking at the options chain. Now, naturally, what I would do is I would say, okay, hey, if I'm looking to run a put, now mind you, it's kind of like over. There's no point in running a put against Tesla. But let's say if I wanted to, I would run a put, let's say since we're in February now, I would probably run a put for probably in May. Now, as you could probably start to see, there's some open interest there because probably people are running that now to hedge against their earnings, since you don't see the earnings one. And I think that's April 26th. So essentially, that's why you see what you see. Now, just like on the call side, there is the same thing on the put side. So there's asking prices and everything else. And then, pretty much the folks in whom which have been running this, they've been running it up. Whereas the folks who are on the call side, they're getting hammered. Or I guess I have to look at it like this. So if I wanted to run a put against Tesla, let's say I would run, let's say a 625 put against Tesla.
Why?
So how I would do this
is, why you're doing that?
I mean, technically I wouldn't do this right now, yeah. But the reason why the reason why I could technically see somebody doing this is when you look at the chart of a Tesla, and then let's throw in some indicators here for some band activity. We can see that it's kind of broken out, which kind of signifies that essentially, hey, we could be seeing this. I don't really trust this in the aftermarket because of the fact that honestly, there's not a lot of volume there. So I can see that we're out of the band. So, but the thing is, the next area of support line that I can see is at the 649. So I would play it towards the next area that was once upon a time resistance. And remember this, here's a lesson for y'all. What was once resistance becomes a support level when you're on your way down. And what was once a support level becomes resistance on your way up. So when we look at it, I would see that, okay, hey, this resistance point here that once was is now a support level. So I'm going to play a 650 put against Tesla. So then I would take that and say, all right, well, now I can literally run a put against this position. Can't really do anything anyways because we're in the aftermarket, but I would really look towards possibly adding up some quantity of whatever and essentially previewing it. Now, if you want to, you can also save the order for later if you would like to do that. And essentially, boom, you've just put out a put against the position.
All right. Switching up the energy. I appreciate you for going back through that basics for the cousin and asset. I really do appreciate that. Just want to acknowledge your generosity in that moment. Last question. Who wins the war for the AR smart glasses?
Well, currently we see Facebook out with theirs right now, but theirs is more so focused towards enterprise. Are we just talking about for the general market, or are we just talking about for specific markets, whether it's just the consumer or enterprise, or is it both?
Let's do both, like consumer and then enterprise.
Consumer is definitely going to be Apple. That's going to win that one. I don't see Google trying to make a comeback. And Amazon, I mean, they'll be around, but this is not going to be one of those ones. They won in Alexa, but yet they're not going to win in this category. I think that Apple just has too much tech. And then on top of that, they have phones that are tied to that ecosystem. Their ecosystem will win out. When I look at, say, for example, on the enterprise level, that could get interesting because you still have Microsoft HoloLens, which is mixed reality between both VR and AR. And then you also have Facebook, which is making a huge, strong case, and they've invested a lot of their money and capital towards their Oculus division. And that's through VR, but also bringing in some of the AR augmented reality. And I think that that could be some strong opportunities. The biggest question is use cases and what the platform and support looks like. But so far right now, where I'm looking at is the biggest winner so far is Apple. And the world is just waiting for them to make their announcement. And that's how you know that they know that the next big thing is coming out of Apple.
All right, so that concludes all of the questions. The majority of the questions were answered. So thank you for that.
Not a problem.
We do have an announcement. This is about the t-shirt contest. Y'all have until February 28th, which is Sunday, to get in your vote for the t-shirt contest for the Come Up Cousins Cookout, which is sometime next year. So if you're a part of the Facebook group, the Come Up Cousins, you have the opportunity to make your vote. If you search the hashtag EPC, that's for Event Planning Committee, you can find the link so that you can vote for your favorite shirt, and then we'll all, everyone will wear the winning shirt. You'll get to be able to purchase that shirt. So yeah, don't forget to vote. And that's it.
All right, y'all. Thank you all for joining in. We had a lot of questions that came through, and keep bringing in your questions to the Come Up series. I would like to make one little small request. When you send me messages on Instagram, please don't type me an essay, because come on.
I second that. I second that. Like, I'd be skimming through, like, what's the question? What's the question? What's the question?
Like, just get to the question. Just get to the question. There's no point in writing me the whole story, because honestly, there's so many things in which that I can get to, and I don't really spend that much time on my Instagram. I really, really don't. I like to be building things on the infrastructure side. So I'm doing that thing. So if I'm on Instagram answering questions, I'm trying to answer them as fast and as efficient as I can. And it's kind of hard to do that when you're writing me, like, a Charles Dickens book.
Dang.
So no shade, but
dang. Was the best of times, was the worst of times, Lord. Oh, that was our only shade for Thursday.
Hey,
Okay.
more to
Okay.
come. More is coming. But I
Yeah.
do have a special announcement coming next Tuesday, so be on the lookout for that.
Exciting and new.
Yes.
Hey.
All
All
right,
right.
so I'm gonna go do some filming tonight.
Oh, nice. Nice, nice, nice. I have packages for you, or a package for you.
Oh Lord.
I don't know what I'll drop it off at some point.
Okay. All
Yeah.
right. So thank you to each and every person that has been awesome to sit down and listen to us and be a part of the conversation, probably in the chat. We thank you all. I am slightly a little bit tired, but yet at the same token, still made of vibranium. You know where I come from. But yeah, at the same token, we're going to go off and literally do some pretty awesome things in the background because we are cooking up some things and it's going to be very, very exciting. So, honestly, thank you for watching. Thank you for supporting. And on top of that, thank you for sticking to the script. And like I always say, the more you learn, the more you earn. Keep studying, keep researching, and also execute when it's time. Until next time, I'm Mark Monroe.
And I'm Jalen GC, the place to be.
And this has been your Come Up. We will see you next Tuesday. Peace,
With a
y'all.
special announcement.